Very special guest, as you know, the St. Louis Fed President Jim Bullard joining me here today. He is a voting member of the FOMC. And the first question, big question, where's the economy right now? I mean, are you worried about the volatility you're seeing? Are you worried about what the numbers that are coming in?
Well, we certainly pay attention to markets and all the data that comes in. I think we're in the middle of a global slowdown, and we're just going to have to assess how this is going to affect the U.S. economy. I think it's not surprising that it would feed back into equities because you've got a lot of these big companies have most of their profits coming from overseas. So it's not surprising to see a volatile stock market here. And then in bonds, you've got a flight to safety going on. It's probably driving our yields somewhat lower.
You mentioned bonds yesterday, the inversion of the 2-year and the 10-year yields. Is that an indicator of a recession? Many folks say it's an indicator 18 months down the road we'll see a recession. Is that it, or has something changed in this economy?
Well, you've got this flight to safety going on, so I think you've got to disentangle a little bit here. Any inversion that's going to send a bearish signal for the U.S. economy would have to be sustained over a period of time, and so we're going to have to wait and see on that.
So you see maybe it's the negative interest rates you're seeing from, say, Germany or Japan that could be bringing money into this and pushing our yields down?
Yeah, it's very common when I think the trade war, it affects companies in the U.S., but it affects people outside the countries outside the U.S. a lot more, especially smaller countries outside the U.S. They're wondering what's going to happen. And because of that, you create a lot of uncertainty outside the U.S., natural flight to safety based on that drives our yields lower.
The market is cut.
But I will say, there's an upside to this. This is lower rates in the U.S., probably more cars being sold, probably more housing than otherwise. So there is an upside to this. There's a little bit of a silver lining with very low, longer-term yields.
And retail spending came in surprisingly
consumer
strong.
looks pretty good. Walmart reporting strong results today. They're in our district, so we keep track of them.
So the market is pricing in 25 basis points of a rate cut coming up at the next meeting. Do you feel like the monetary policy is accommodative enough, or does more need to be done?
Well, I wouldn't want to prejudge the meeting, but one thing I do have my eye on here is the TIPS break-evens. That's the market's assessment of where inflation is going to be, let's say, over the next 5 years. That's indicating to me that they only expect 1% inflation or maybe 1.1% inflation over the next 5 years. That's not high enough to meet our target, so that's something I'll definitely take into account if it's sustained going forward, going into the September meeting.
So do we need an emergency session to deal with this, or do you think that the mee's scheduled in September?
I don't think so. I think we can react appropriately, and the timing is never critical on these things. A couple of weeks, one way or the other, probably doesn't matter. What matters is that you're in the right zone for interest rates and that you're reacting appropriately to incoming data.
So is inflation your big thing still, or are you looking at the global slowdown as the big headwind?
Well, I want to hit the inflation target. We said it was 2%. I want to hit the 2% inflation target. I wouldn't mind if we were over 2% inflation in this environment. We've missed to the downside for a long time. So I would like to take action to try to make sure that we hit our inflation target, given everything that's going on in the U.S. and the global economy.
Maybe a bigger action that's happened than that's happened before, because they've been going 25 basis points. Could we see 50? You want to see a bigger action being taken, or
yeah? I mean, I wouldn't want to prejudge that, and I think exactly where you put the moves is not critical. But what is critical is that you take this on board and you try to get the right policy for the situation.
Your Federal Reserve has done a lot on perception. Does perception play into this a little bit? Because the fundamentals are there. You mentioned the consumer spending is strong. Walmart came in with strong earnings. Yeah. The fundamentals are there. Is perception a big deal in here?
Well, in markets, it's always about trying to outguess your rivals that are trading in markets. So I think some of this downdraft might be a little bit overdone. Certainly, viewing it here from the U.S., the numbers you're citing are, seem pretty good, or seem okay at least. 2% growth, nice job market, very low unemployment, good consumption growth. A lot of things look good from those perspectives. On the other hand, you've got this trade war going on. You've got a lot of uncertainty globally. Europe not doing as well as they'd like. China looks like it's slowing down. So those factors have to be taken into account as to how those will eventually come and hit the U.S. economy. I think this is a case where if you're looking backwards at the data, it looks pretty good, but boy, you want to be taking into account what might happen going forward.
And it's interesting, you talk about the consumer spending is strong. Does more need to be done to get the perception turned that we do have good fundamentals here? Do you feel like that needs to have a light shed on it? Well,
I think traders should be taking that into account. Everyone should be taking that into account, that fundamentally you've got a very good labor market. You've got reasonable growth, near trend in the U.S., 2%. Something like that expected actually all the way through the second half here. If we play our cards right, I think we can get through there's a global slowdown, but I think things will stabilize and you'll have a good run of growth over the next couple of years.
Yeah, so then with what happened yesterday, they had 800 points to the downside. Do you blame the trade war then for that? What was the heart of that, of the volatility we're seeing?
Okay, it's a big sell-off, but come on, the market's way up this year, and even if nothing else was going on, you might have expected some repricing there. So that's one thing. The other thing is, as I said at the beginning, a lot of these companies get a lot of their profits from overseas. So to the extent that there's uncertainty overseas, you see that back in the equity market, but that isn't necessarily the fundamental U.S. economy. The fundamentals of the U.S. economy are pretty good.
I appreciate it. Thank you very much, President Jim Bullard from the St. Louis Federal Reserve.